You clicked on this video because you want to scale your trading fast. You want to make thousands of dollars per day and become a full-time day trader. However, if you don't follow the right process, you're going to scale your risk prematurely and end up blowing up your entire account like 90% of the traders out there. Yes, the title of this video is slightly clickbait, and I don't care. I wanted your attention so I could show you how to scale your trading the right way, the way that leads to long-term profitability. 90% of traders will ignore this and just try to get rich quick. So if that's you, here's your opportunity to click off of this video. But for all of those who are ready to trade like professionals, think like professionals, and scale like professionals, let's get right into the video. I have been a full-time day trader over the past 5.5 years, and during that span, I have been able to scale my risk effectively to the point where over the last 1 year, from October 18th of 2024 to October 17th of 2025, I have generated over $541,000 in day trading profits, which is a cumulative rate of return of over 359% on my entire trading account. This is my Charles Schwab brokerage login, and just to show you this isn't Photoshop or a screenshot that I edited, I'm gonna go ahead and refresh the page on my Charles Schwab account, and there's the $541,000. And the reason I'm showing you this is to be as real and as transparent as possible, and to show you that the scaling process that I'm going to teach you in this video actually works. One of the biggest beginner mistakes that I see day traders make is that they go into the markets and they immediately start risking a lot of money. Even though they're brand new, they haven't really refined their trading system, and they start risking $500 a trade, $1,000 per trade, expecting instant results. And that's the mistake. And the way that I want you to think about scaling your risk is almost like going to the gym. When you go to the gym for the first time, you open up your gym membership, are you going to the bench press immediately, putting on two 45-pound plates and start benching, 225, especially, as a beginner lifter? Obviously not. You have to take things slow. And then once you're in the gym enough times, you get the right nutrition, you're taking the right supplements, that's when your progress is going to actually, progress rather quickly. And the same thing works with trading. You have to start slow, and then your risk will start to scale quickly as you develop that foundation for your trading. So as a beginner trader, you should either paper trade for a period of time, whether that's a few days or a few weeks. And then whenever you transition into real money, you need to start small. And I want you to focus on building consistency. So at first, I want you to risk like $1 to $10 per trade. And yes, that's not a lot of money. You're not going to make a lot of profits with $1 to $10 risk. That's irrelevant though. We don't really care about our profits in the beginning. We care about focusing on the process and becoming elite level traders, okay? I have met a ton of traders who want to make a ton of money but can't because they're not very good at trading. I have never met an elite level trader who doesn't make money. So instead of focusing on the outcome and on your profits in the beginning of your trading journey, you should be focusing on the process, building the foundation for your trading and building the right habits for success. If you can't make money with $5 risk or $1 risk or $10 risk, pick an amount that is small relative to your risk tolerance. Everyone is a little bit different, but if you can't make money with small risk, you're not going to make money with big risk. Okay, that's just not how it works. In fact, when you scale your risk, it could actually amplify a lot of the flaws and a lot of the inefficiencies that are in your trading, and I'll get to that in a second. So I would approach trading the same way you would approach going to the gym. You don't just load up 5 plates on deadlift and start deadlifting because you have the risk of getting injured. You might hurt your back if you put too much weight, and then you can't go to the gym for a while. Well, the same thing for trading. If you over risk at the start, you end up blowing up your account, and then you can't trade anymore, or you get discouraged, or you think it's a scam. And that's what most traders do. They get into it, they risk too much, they blow their account, and then they say trading is gambling. Focus on consistency. That's your first priority as a beginner trader. Everyone wants to go from a beginner trader to making a lot of money, and you skip a very important step in the middle. Your first goal is to become consistently break even, where you're not losing money on a day-to-day basis. So you should go from beginner trader to consistently break even. You're consistently not losing money. And once you're here, you're 70% of the way there towards becoming a profitable trader. And once you're consistently not losing money, that's when you can look to scale your risk and, of course, scale your results. You should have a very smooth equity curve. This is kind of like the performance of your account. Your equity curve should be like this, where of course there's going to be dips along the way, but it should be overall smooth and pointing up. You don't want something like this where you have a nice day, then you give it all back. You have a nice day, you give it all back. Then you have 2 bad days in a row. Then you have a nice day, you give it all back, right? And that's what happens with inconsistency. You can't scale inconsistency. You start small, you become consistent, that's when you scale your risk. It's very, very important that you follow this process. Otherwise, you're going to end up losing money. The whole point is to learn all of the basics, the fundamentals, what style you prefer as a trader on small risk. So even if you make mistakes, even if you want to experiment with strategies, and let's say you have 10 losses in a row because you're experimenting, well, it's not going to really impact your account. So let's say you're a beginner trader, you're focusing on consistency, you're focusing on building the right habits for success, and let's say you're risking $10 per trade. What could your results realistically look like, and how do you scale those results? So let's say, for example, you finish with $10 on Monday in profit. That means you made 1 R. Tuesday, you finish with 15. Wednesday, you make 30. Thursday, you finish with $15. That means you lost 1.5 Rs. And Friday, you make 50 bucks. Total profit at the end of the week is $100, which is a fantastic result, especially if you're a beginner trader. That means you made 10 Rs on the week. That is great. Now, here's where most traders mess up. They'll look at this total profit at the end of the week. They'll see that it's only $100 and they'll get discouraged because ultimately most traders don't care about becoming professionals. They're not focused on the process of becoming profitable. They're just focused on the outcome. They just want to make money. So they'll look at this total profit of $100 and they'll feel underwhelmed. They'll get discouraged and they'll say that, hey, $100, that's not really going to move the needle in my life. That's not going to help me achieve financial freedom. And then those traders feel pressure to scale their risk prematurely to ultimately satisfy their own greed. So what a lot of traders will do is they'll say to themselves, hey, I made 10 Rs on $10 risk, and that led to a $100 profit. What if I make 10 Rs on $1,000 risk? That means I'm going to make $10,000 for the week. And that is a mistake. Just because you can make 10 Rs with $10 risk, that doesn't mean you can make 10 Rs with $1,000 risk. Because as you scale your risk, that's going to have massive impacts on your trading psychology and on your mindset, which I'm going to be talking about next in this video. So your goal as a trader is to establish consistency with small risk and then scale gradually. So let's say you're trading with $10 risk for a few weeks. Once you're consistently profitable, once you're feeling confident with $10 risk and your losses with $10 risk aren't really impacting your emotions, that's when you could scale your risk to $15 or even $20. In the beginning, when you're risking smaller amounts, you'll find yourself going from $10 risk per trade to $100 risk per trade rather quickly because you're still dealing with smaller totals and smaller amounts. However, once you get to like $100 risk, $200 risk, it's going to be a lot more difficult to scale your risk quickly. So it's going to take way longer scaling your risk from $100 to $500 or $100 to $1,000 than from 10 to 100 because you're dealing with larger amounts, and those larger amounts are going to have larger impacts on your trading psychology. So that's what I would do. I would raise your position size 20 to 50% every time you feel super comfortable with your current risk. So you can go from $10 to $20. From there, you can go from 20 to 30 or even 40. You can make a larger jump since it's a smaller number. And then once you get to like $100 risk, that's when you want to increase your risk incrementally from 100 maybe to 130 or to 150. From 150 then to 200, etc. Okay? So let's say you're risking $10 per trade here, and now you've raised your risk to $15 to $20. Here's the type of results you could expect, where Monday, now you're making 50, Tuesday you make 60, Wednesday you make 90, Thursday you make or you lose $30. So of course, if you're scaling your risk, your losers will scale as well. That's why it's so important to build consistency first, where you're either breaking even or at least making money every single day. So once you scale your risk, you're not really going to be scaling your losing days as much, because you know how to limit your losses. You know how to break even every day. Friday, you make $75. Total profit on the week is $245, right? This is still not a large amount, but with $15 to $20 risk, this is still a great result. And the goal is, you shouldn't be focusing on making money as fast as possible. Your goal is to become an elite level professional trader. It shouldn't really matter how long it takes. Focus on the process and scale your risk gradually. By the way, I have hundreds of hours of free education on the internet, not only on this YouTube channel that you're watching right now, but I also have a free 10+ hour trading course that is genuinely better than most paid courses on the internet. It will help build the foundation for your trading success. You could access it in the description of this video. And if you're someone who's looking for something a little bit more serious and you want more hands-on mentorship, I do personally help scale and coach traders from zero to consistently profitable, where I take my students under my wing and they trade live with me every single day. So if you are looking for more serious mentorship, you could apply for my mentorship program in the description of this video as well. Let's talk about how scaling your risk could have massive impacts on your trading psychology and on your mindset, to the point where you won't be able to make sound decisions. You won't be able to manage your trades objectively if you scale your risk too quickly. Have you ever been in a trade where you have way too much risk? You're overexposed, and let's say the trade starts to move in your favor, starting to go up. You're seeing that P&L number that shows you the amount that you're up or down. It's starting to turn green. It's moving up quickly. And all of a sudden you feel this emotion within you that you're like, oh my God, I don't want to give back these profits. And then you end up exiting that winning trade way too early, basically out of fear that you're going to give back your profits. And then like an hour later, you look back at that trade and it went significantly higher. And in fact, it hit like all of your initial targets. And you're thinking to yourself, why did I not just stick to my plan and stay in that winning trade? It ended up hitting all of my targets. Why did I exit impulsively? And the reason you exited impulsively is because of your own emotions. It's because of fear. And ultimately, that fear stems from you being overexposed on that trade. You had way too much risk on that position, and that affected your objectivity, where instead of following your plan and letting the trade run and hit your targets, you exited impulsively because you didn't want to give back your profits. Or maybe, let's say, you're overexposed on a trade, you have way too much risk, and the trade starts to go against you. You have a stop loss set, but before that trade even hits your stop, you get scared and you impulsively exit. And then next thing you know, that trade never hit your stop and then continues to your target, and you would have probably made money. And you're looking back at that setup and you're like, why did I get out? It never hit my stop loss. Why didn't I just follow my plan? And if I did, I would have made money because the trade ended up hitting my target. And the reason you exited early before the trade even hit your stop loss is because also a fear. You didn't want to lose a lot of money because you were overexposed. You basically got shaken out of the position because you had way too much risk on that trade. So ultimately, you might think that you increasing your risk is going to increase your profit. That's not necessarily true, because you're going to end up overthinking all of your entries and your exits, and you're going to cut trades way too early. Okay, so a solution to that is scale your risk gradually, because you'll desensitize yourself to these larger numbers over time. You want to scale, slow, 20 to 30% at a time. You don't want to scale your risk from $10 all the way to $100 overnight. Another thing you could do is rewire your brain. Instead of thinking about dollar amounts, think of it as in R's. So instead of, let's say you're risking $10 per trade, instead of you thinking, oh, I only made $100, which doesn't sound like a lot of money, you should be thinking, oh, I made 10 R's. 10 R's, that's a fantastic result for the end of the week. And that will restructure your expectations, and it'll restructure the way that you perceive your own trading. Because like going back to this example, if you only make $100, that's not that impressive, but making 10 Rs, that is impressive. So think in Rs, which is like risk to reward units instead of dollars. So instead of, let's say you have a losing day, instead of thinking, oh, I lost this amount, think I lost this amount of Rs. What's ultimately going to give you the confidence to scale your risk in the first place is how successful your trading system is. And that's exactly what you need to be focusing on, especially if you're a beginner trader. Forget about the money, forget about scaling your risk quickly. Like I said before, I want you to detach yourself from the outcome and exclusively focus on building a trading system. You need to be focused on the process. And that's what's going to separate you from all of the other traders out there. So just as an example, what should go into your trading system? Well, right off the bat, what types of setups are you taking? Are you taking retracements or breakouts or reversal trades? What style of trader are you? Are you a scalper? Or do you gravitate towards holding your positions for multiple hours? Are you trading large caps or mid caps or small caps? Or are you trading penny stocks? What is your risk management protocol? Where are you placing your stop losses? What are your entry criteria? How are you going to be managing your trades? Are you going to be giving your trades a lot of room, which is more of a looser management style where you attempt to aim for big targets? Or are you going to be trailing your positions tighter, where you go for a little bit less R to R, but maybe you have a higher win rate and you're more of a scalper, right? Like all of these questions need to be answered before you scale your risk. And the way to answer those questions is to build your system. And you want to use data to ultimately justify scaling. So as a beginner, you should be taking 50 to 100 trades. And as a beginner, you're probably going to be losing a lot of those trades because you're experimenting. You're trying to figure out what works, what sticks within your trading plan. And that's exactly why you start off with really small risk or paper trading. So even if you experiment and you try different stuff out and you have a lot of losing trades, that's not really going to impact your account. Now, once you take 50 to 100 trades, you want to ask yourself, what is working for you and what isn't working for you? And what you want to do is eliminate the obvious mistakes and continue doing whatever that's making you money. So for example, let's say on breakouts, you have a really nice win rate and all of your breakouts are actually making you pretty decent money, but you're losing money on reversals. Fantastic. That gives you data. From there, you either eliminate reversals from your trading plan or you just have stricter criteria when it comes to reversals. You maybe look at your trades and out of 100, 30 of them were scalps and all of those scalps were highly successful. Maybe you have a 70% win rate on your scalps, you're making 2 to 3 Rs, and that's kind of, your best strategy. That's data. From there, you can gravitate more towards scalping versus holding your trades for several hours. You get the idea. And that's what you want to do. You want to figure out what is making you money and what is losing you money. And at first, you might not know what's making you money yet since you're so new, but it's pretty easy to identify what is losing you money. So try to find those obvious mistakes and eliminate them. And based off those observations, based off that analysis of looking at your 50 to 100 trades, from there you refine your system, you make the necessary changes, and then you take another 50 to 100 trades and you follow the exact process where you ask yourself, what's working, what isn't working? Then you eliminate mistakes and you continue doing what is making you money. And after multiple iterations of that, you're going to improve. As long as you're disciplined, consistent, you're doing that every single day and you're actually eliminating your mistakes and you're focusing on building the right habits, you're going to improve. You want to run your trading system like a business. If, let's say, you have a business and you are running ads and your ads are not profitable, are you going to scale your ads if they're not making any money? Obviously not. So why would you scale your risk if your trading system isn't consistently profitable yet? All right, build a consistent system that works, and then you could scale. You know what's even more important than knowing when to scale your risk? Knowing when to scale down your risk. And I have a rule for myself: when in doubt, lower your risk. Whenever I'm frustrated or I'm feeling emotional or whenever things aren't quite clicking in my trading and I'm feeling off, I always lower my risk. A lot of traders, unfortunately, actually raise their risk when they're feeling frustrated and emotional, and that's how they end up blowing their account, especially when it comes to revenge trading or making their money back. They always raise their risk, and that's a huge mistake. Remember, defense wins championships. Sometimes the most important thing you need to do in your trading is to survive, especially when you're struggling and things aren't going well. Maybe the market is transitioning and you need to adapt. Sometimes you just have to lower your risk and regain your confidence. So make sure you know when to lower your risk as well. And ultimately, scaling in trading is a skill, okay? A lot of people think that scaling is just adding zeros or increasing your share size. In reality, it's learning how to handle pressure. It's learning how to handle larger risk, which ultimately will impact your trading psychology. The best traders in the world are not robots. They're not emotionally numb. They're emotionally disciplined. And that's what your goal should be, to become an emotionally disciplined trader. And that takes time. And that's why you need to be scaling your risk gradually. And if you're struggling with sizing up, or maybe you do have a profitable trading system, you are consistently profitable, but you have a psychological block that's stopping you from raising your risk. I've seen that with a bunch of traders where they're actually really talented traders, but they just can't seem to find the confidence to raise their risk. Try to just rip the Band-Aid off, right? Increase your risk and just do it and force yourself to take trades. And it might be scary for the first few trades, but as long as you have a profitable system, you'll end up surprising yourself. All right. So sometimes you just have to rip the Band-Aid off, start, risking more money, and just stay consistent with it and be disciplined with it. Be aware of your emotions and force yourself to size up. But this is only for traders who, are struggling to size up when they're actually making money and they're actually consistent. Hope you enjoyed this video, guys. Make sure you get started with my free 10+ hour course, like I mentioned earlier in the video, and make sure you leave a like, make sure you subscribe to the channel for more education, and leave a comment with feedback. I love reading the comments. Thank you so much for watching. I'll see you on the next video.